Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. We're going to have a very, very interesting day today. The economic numbers came out regarding the unemployment claims, and the numbers that came out were 400 and I believe 411,000. Numbers that filed for unemployment as opposed to an estimated number which was around 380,000. The market we're going to be looking at is gold, silver. We're going to be taking a look at copper, Bitcoin, and also Coinbase. We'll be right back, so stay tuned. Coming back here, gold trading last 1784.85, approximately up about $1.30. We have in a bit of a reaction here, a bullish reaction to the economic reports. The silver trading up about 7-8 cents, 26.19, 26.19 and a half. Copper is slightly down about 3 cents at 429, 429.80, 75.80 bit. Coin up 198 at 228, 228.20. GBTC, which is the Grayscale Bitcoin Investment Trust, which is the one that we trade and follow basically the movement in Bitcoin, is trading at about 28.86, 28.87. As you can see, we have green numbers pretty much across the derivatives in the gold market, as well as in the silver market. So the numbers basically that we have for today, let's take a look at the Thinkorswim platform here and see where we are in relation to the daily numbers. The daily average is 1783, and obviously we are in a neutral zone once again. There is no signal for day traders based on the VCPMI right now, as the market is trading around the average price of 1783. Now, what it's doing is it's activating a bullish price momentum. And the AI basically has certain rules that it adheres to in terms of the execution of this signal. And when it's trading around the average price, it's a 50-50 standard deviation. It can go either way for you. And for me, as a trader, what I want to do is wait until the highest probability for me to execute a trade. And so that would be basically either the market coming down to 1769 or 1760. Or if we see a rally up into that 1792 area, all the way up to 1805. So I am comfortable in terms of day trading, waiting for a signal to be activated according to the rules of the VCPMI. And I'm comfortable basically on my overall position. In terms of the long-term aspect of the market, we're looking at a day trading strategy, and basically what I follow is a weekly and a monthly and an annual strategy where I take the prices basically into a harmonic alignment, or I look to identify a harmonic alignment in all of the trends, which essentially create the highest probability for a reversion to unfold in following the principle of the reversion to the mean. And the same principle of the structure basically that's set up for the day, it can be set up for the weekly, monthly, for the yearly, and for the cyclical patterns that you may want to use, providing that you use the proper data for its individual time frames. And what this does for me is, once again, it takes me out of the chatter, out of the emotion of the market. Taking into consideration, obviously, the reality that things like what happened here just last week, for example, can happen in trading in the futures markets, and you have to be prepared for that. Because we're talking, particularly if we're trading in the gold market, which is a conscious decision that a trader makes. In other words, for me, I choose to trade money. And trading in gold and silver is trading money instruments. If you're buying into cash, if you're trading in the cash market, then you're trading the actual cash, the actual currency, I believe. And this is an argument, not an argument, but a point of observation, I think, that people are making in comparing gold to Bitcoin. In my opinion, gold has been traditionally a currency for thousands of years in its own physical market. And as we knew, basically, as the old economy, you might say, that we knew. As a consequence of this pandemic that we saw in 2020, it accelerated the need to basically expedite certain technological processes in order to kind of get through the crisis. And if we go back to what happened, to gold alone during the crash here, the market came down, to about 1450, and it rallied, exploded up to about 2089. This was the first leg. This was the first leg of a major move up that the gold market is building. And what the gold market did here basically is it made the transformation from a commodity to a currency. And the US dollar reversed. The US dollar became a commodity. The other side of the gold market is the US dollar. And if you're pricing things in US dollar terms, you're losing approximately about 3% right now, based on just the current inflationary numbers that came out and current levels of interest rates. So the pandemic disrupted, I believe, the dynamics of the fundamentals that we were working with previously. And it took us into a whole different world. And it really, what it did is accelerated this process of a virtual economy. We were tampering, so to speak, with the internet in terms of commercial uses and buying things and so on and so forth, creating its own economy. And one of the things that was certainly ambiguous was how do you manage and control that economy? And obviously at the time it was too small to be concerned with. Well, guess what? Welcome to the new virtual economy that is growing by leaps and bounds. And now pretty much everything is virtual. And this is what basically happened in the stock market is that it anticipated that this crisis was an incredible opportunity to make an adjustment to this virtual economy that we're in. And as we mature more into this virtual economy, obviously, we begin to see that the US dollar as a fiat currency has no place in it. And therefore, we had to create, or the need itself created, an asset, a virtual asset that now is leading towards becoming a virtual currency in its own right, in its own technological landscape. So drastic changes have taken place in a short amount of time. And, it has pretty much affected the price of most commodities, most products that are priced in US dollars. Now, one of the things that we're seeing here is that the pandemic here has, caused the ripple effect. Basically, was not only in the physical sense of the market, but it shifted the labor psychology, or you might say the model that we were using previously. It became challenged and tested, particularly with the ability that now people are finding, obviously, that you can work from home, you can pretty much do everything through the digital world, digital economy. And now, obviously, we have a digital currency. And there is a lot of discussion about Bitcoin or virtual currencies, you might say, becoming a greater part of this virtual economy. For the purposes of my own choice, and again, it's a personal choice, that I can only trade a certain amount of products. Some people may be able to trade, hundreds of, but I'm not a computer in that sense, that for me to manage the computerized automated signals, I believe has to be done according to my personal use, according to your personal use, how you trade the market based on your profile. You can use this trading tool to act as a GPS for you, that you can customize according to the markets, according to the instruments, and according to the risk management of these instruments that you got to take into consideration. Whether you are good for futures, whether you are good for stocks, ETFs, or options, depending upon your risk profile. The currency markets are not a regulated environment. It's the wild, wild west at this point. Anything goes. But it's obviously becoming and maturing into a virtual asset that is expanding upon the blockchain foundation into the markets, into different products that are becoming I believe, a more transparent way of managing inventory. And so, not to mention that the intention basically is to create a monetary system that is away from the central banks, eliminating the middlemen, and eliminating a lot of the cost factor involved in between those transactions. So it's a great tradable instrument in the markets that we trade. Basically, again, our coin, which is Coinbase, which is the application or the platform that you can execute virtual currencies. And obviously, it includes all the currencies. So as the volume increases, I believe that this is going to have tremendous value, and it's in its early stages. Obviously, when the IPO came out, it was about 420, and we've seen a major correction in that. But I am taking advantage of this opportunity because I think this is long-term going to be a fantastic asset, and who knows where the price may reach. But once we establish the bottom in some of these currencies, and in particular what I'm following is Bitcoin, it's going to be an interesting markets as we move into the third and the fourth quarter of this year. And so, once again, you want to be aware that these are highly volatile instruments, and they are, I would say to you, the most volatile instruments that I have seen in the futures market. This by far surpasses pork bellies, So volatility is incredible. So measure that volatility according to your profile. It's very important, and use it as a virtual asset that I believe that you can continue to trade and build, particularly with a track record that pretty much it has, that it's producing a couple 100% a year, and it's been doing that for the past 10 years, I believe. So it's a great, highly speculative, volatile instrument to trade. Coming back here to the gold market, in taking a look at some of the instruments that you can trade, for example, you can trade Nugget, which is a double X velocity ETF. It's one of the derivatives that we follow and trade. It's a highly volatile instrument as well, and you don't want to hold on to this for a long period of time unless you're trading against it, where you're generating income by selling premium against it, basically, if you're holding on to the underlying ETF. So there are strategies, obviously, that you can use depending upon, again, your profile, where you can take the signal that is produced, the directional signal that is produced by the gold market, and create and customize an inventory, a position for you that will give you flexibility for you to manage your risk. You can day trade in the futures, but you can use the directional signal on the weekly, the monthly, in some other objectives, you might say, in how you design your portfolio. As a trader, I want to be connected with all of the trends. And in particular, the trends, again, coming back to that we define are the daily, weekly, monthly, annual, and the cyclical, which is basically a 9-year cycle that we look at. And within those cycles, then we take a look at also the pretty much specific moving averages that are within that period that gives us just confirmation of some of these moves. But in terms of executing, we look at the VCPMI algorithm that defines within the structures, basically, again, the very, very specific structure of identifying the average price, and within that average price, it identifies the extreme above or the extreme below that average price within that time frame or sector that you're trading. What I want to do is share with you at this point this latest podcast that we just published here in YouTube. Gold, Fed's meeting activates annual triggers. Hello, everybody. This is Patrick MontesDeOca with the Equity Management Academy Weekend Podcast for June 23rd, 2021. Gold Fed's meeting activates annual triggers. Summary. Last week, Fed Chairman Powell basically did nothing. Based on the 10-year note, it does not seem to indicate that there are fears about inflation. Lumber prices have collapsed to $907.50. The U.S. dollar is facing a tremendous amount of supply, which is being added to the economy. The Fed balance sheet has reached unprecedented levels. Looking for a portfolio of ideas like this one, members of Mean Reversion Trading get exclusive access to our model portfolio in Seeking Alpha. Technicals. Gold is trading last at 1775.60, down about 750. Silver is at 2584.50, down about 18 cents. Copper is slightly higher at 422. Coinbase is down about 10 points to about 211.75. The Grayscale Bitcoin Investment Trust is down about 10% to about 25.13 in a fast market. We use our proprietary variable changing price momentum indicator, the VCPMI, to analyze the markets and to act as a GPS for our trading. Based on the daily data, the VCPMI identifies the extreme levels above and below the mean. We favor trading at the extreme levels since such trades have the highest probability of success. The VCPMI daily average in gold price is 1778. The extreme level above that average is 1792, which is the VCPMI Sell 1 level. The Sell 2 level is 1801. The VCPMI extreme levels below the mean is 1769, and the Buy 2 levels is 1755. The daily average price of 1778, with the price closing below the price, it is a bearish price momentum according to the artificial intelligence in the VCPMI. If the price is around the average, then there is a 50-50 chance of the market going up or down. Therefore, we trade the extreme levels. We do not trade around the mean, since the odds are 50-50. At the extreme levels, there is a 90% sell 1, buy 1 levels, or 95% sell 2 or buy 2 levels. Chance of the market reverting back to the mean. It's not 100% certain, but the odds greatly favor from the extreme, trading from the extreme levels. The gold market right now is in a neutral zone to bearish. If gold closes above 1778, the average price, then it will activate a bullish price momentum, and it will likely revert back to the mean. If gold comes down to 1769, the buy one day level, where it will be likely to revert back up to the mean from there. Right now, there is no day trade for gold. Silver has mixed signals via the VCPMI and is trading at 25.86. The VCPMI daily average price is 25.90. The sell 1 is 26.22 and the sell 2 is 26.46. The VCPMI buy 1 level is 25.67 and the buy 2 is 25.35. We also are looking at the weekly VCPMI numbers and the 360-day cycle buy level, which has been activated at 25.85. The 360-day cycle trigger is significant. If we get above 25.90, the daily bullish price momentum will be in play and the target of 26.82 will be activated. The initial 360-day target is 26.59, which is the weekly average on the daily and the weekly. We are looking at an oversold condition. The weekly level is all the way down to 25.02. It looks like the market found buyers this morning. Now the market is reverting right back up again. On the daily signal, we are neutral to bearish. So it is a mixed signal. However, we focus on the yearly cycle with the 25-25 trigger. Coinbase was up at 400 plus and is now trading at about 219. The volatility is in virtual currencies is something no one has seen before. The US dollar, a fiat currency, does not fit into the new virtual currency. We appear to be moving into a virtual economy with great interest in virtual currencies. There is a great debate about the legitimacy and logistics of virtual currencies. At any case, the market is showing the great need for an alternative to fiat currencies like the US dollar. Gold and silver are strong candidates as an alternative, especially given the long history of being viewed as currencies or real assets. They are also far more stable in price than virtual currencies. The US dollar is facing a tremendous amount of supply, which is being added to the economy. The Fed's balance sheet has reached unprecedented levels. Even countries such as China are starting to experiment with virtual currencies. Retail is also becoming virtual, since you can order anything from groceries to cars online without ever going to a physical store. We are in the middle of a major reset as we seek a currency that will fit into this new paradigm. Fundamentals. Last week, Fed Chairman Powell basically did nothing. He said they would see what happens over the next 40 years. Over the next 2 years. 2 years is a long time these days. Even a year is a long time. Based on the 10-year note, it does not seem to indicate that there are fears about inflation. The note has been around the 150 area throughout all of this talk about inflation. Now it is at 149, and there has not been any major shift in the note. We watch the 10-year note as an indicator of what the market thinks about inflation. We also track lumber, since it is used in building and construction. Lumber prices have collapsed to $907.50. The only other market showing some kind of inflationary indication is crude oil, which is at about 73. Brent oil is at 75. As we return to a more normal economy, crude is going to be much more in demand. The price increases seem to be more related to supply chain issues related to the pandemic than everything else, or anything else. It will take time to restore the supply chains. We are also facing one of the worst droughts in hundreds of years, which will put pressure on the grains. The market last week, in general, collapsed in commodities to unprecedented levels, especially for one trading session. Inflation does not appear to be a worry. Supply chains issues and the drought appear to be worries. For virtual currencies, we expect the extreme volatility to continue.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.